So if it is going to go back down, it'll probably be around this level.
Yep.
Because if it hits 420 and if it's able to establish new support level at 420, oof, I'd be like, I don't know, and not
Yeah,
just touch
that'd be
it,
tricky.
but establish it.
Right. Yeah, I
What
agree.
about you, Ty?
What's up, man? I totally was out for like the last 5 minutes. What's up?
Oh, okay. No, we were just going over kind of like what everybody did for the weekend in the market, and we were talking about. Shrejay says he's got a bearish outlook. Thinks the rally's over. Um, what's your thoughts? What are your thoughts on it?
Oh, I definitely think that we're not going up any like for long. I'm
Yeah,
still pretty bearish on everything, unfortunately.
yeah.
But
No, you're good.
um, I like I've noticed the little breaks that we've been having. I have it over here, but I just don't think that things are going to last for too long. Like Spy, I think it was Spy. I was looking at the futures just a second ago, and they're touching the upper line of the linear regression channel.
Hmm.
And for me, RSI is a big tell sign, and that's sitting pretty high right now. So it just doesn't seem like things are going to keep pushing up too
Yeah.
far, especially volume. Like volume's been huge.
RSI on which time frame?
1 year daily is what I'm looking at.
1 year dailies. Okay, cool. Yeah, and that's good. It's interesting. It's gonna be something I'm gonna be having in the back of my mind as I trade this upcoming week. Kind of the overall outlook. It's good to take a step back and look at, okay, like, where are we going? Because just understanding that trend is so important when conducting intraday trading, right? Like, you want to be able to, at the very least, establish, like, hey, do I want to go for calls or puts today based on the overall trend? So I'll be looking out for that.
Yeah, yeah. It's it would be nice to see a really nice breakout and a push to the upside, but I don't think the
Yeah.
support's really there.
Yeah. Oh, puppy. Hey, I'm gonna go to the side. What are you, Mr. Garcha?
Uh oh. So,
Sorry, guys. I know you guys called me. Actually, my daughter was here. She wanted to grab a headphones.
Hey, how was your week?
It's pretty good. It's pretty good. Learning day to day.
Sweet, sweet. Hey, man. Well, Ty and I had a conversation, and he mentioned that one of the reasons, for the presentation was really you were kind of curious about, day trading. And is that
Yes,
your primary instrument? Are you more of an intraday trader?
yes, that's my goal for now. So
Okay.
basically, I'm a small account trader. So my strategy plan is to like increase my portfolio for now. So basically, I'm focusing on intraday and swing trades.
Right. Wow. You do, man. You're like my twin. um. Okay. Yeah. Because that's exactly what I do as well, man. I do intraday. My investment goals are diverse, but for the short term, it's aggressive growth, right? I
Yes.
want to be able to, I got a lot of debt I got to clear off. I want to be able to put myself in a situation where I can afford to set aside money to do more long-term strategies. But, definitely one of the main reasons I adopted this more aggressive strategy based off of volatility is exactly that, aggressive growth, and just, establishing that sort of foothold. But long term, is it sustainable, especially at larger quantities? Like, say you're trading six figures, I don't, we'll get into that, but maybe if it was broken down into multiple trades. But yeah, well, it's 108, guys. Well, I'm in East Coast, so I'll just go ahead and get started. It'll be a rehash for Shrejay and Ty, and mostly for you, Garsha. But so, welcome to my presentation. Really, this is just going to be me talking about my strategy, how I've come to this point, my indicators, how I've got a couple of examples on, the perfect setup for, there it is, the perfect setup for, what I would consider a profit and a loss. And a little bit about myself, I've been trading since November 2020. I was in Afghanistan. I wanted to learn something productive while I was deployed. I picked up, investment stock market. I started off with penny stocks up until February 2021. Went into crypto up until May. Took a break throughout the summer. August, came back into options in October 2021. I was paper trading up until about April 2022 this year, and then I finally moved over to my real account. But I had that natural evolution of a retail trader, right? You get in, you're like, penny stocks are craziness, and you go into crypto, and then you meet someone, and you start becoming educated, and you're like, okay, you know what? Let me look into options. Let me look into that. I know someone mentioned. Oh, I know someone mentioned in the chat. They were like, "Why do you trade options as opposed to like futures?"
Hey,
And the reason is
Todd.
I don't really have a reason.
Today's a day of rest for Mama. We're gonna go to Buffy and get that
Hey,
for Mama.
Todd, you mind muting your mic, bro?
Then we're gonna come.
I'm sorry.
All right, no worries.
Yeah, and I don't really have a reason for trading this strategy in options versus futures. It's just what I got into first after crypto. I picked up options. It actually was based off of a book that a buddy of mine gave me. He wasn't doing options, and he picked my curiosity, encouraged me, and that's kind of where it started off. But I mean, does anyone have any questions for me as far as kind of, my evolution as a trader, or any sort of question along that line?
I'm gonna ask what brought you into wanting to day trade versus rather like longer time frames.
Yeah,
Like,
and that's the short answer to that is just aggressive growth, right? I wanted to um, aggressively grow my account, but also, and this was sort of the confirmation that I needed. I was at a New Year's party in last year, so 2021 to 2022, and I met a real day trader in the flesh, not a myth. He had been trading for some years now, and he was that was his primary income for him and his family. He's full-time day trader, specifically on SPY ETFs. Essentially, the strategy that I have now is the one that he implemented. I'm sure it's a slight variation of it. It's kind of, we all develop it to our own style. But when me and him had that conversation, and I was telling him, I really want to break into options, but I'm just so unsure. There's so many different strategies. It's really intimidating. This is kind of what I want to do. And me and him had that conversation. He provided historical data context, his own journey into options and research, and that's really kind of what I've been trying to emulate since then. Only, and it's one of those things where you see YouTubers, you hear about people, right? 1 in 10 traders are profitable when day trading, but to meet someone in the flesh is what really kind of set me on this path, and me and him still talk to this day. Ty, you met him. James, when I invited him to the other Discord, and that's really why this is a strategy that I went with. And it's a really good, like, if it's implemented correctly, it's a strong foundation for being able to then move into more long-term strategies, right? And I know Eric has talked about how he, when he was younger, 17 to 25 or 17 to 20, he was very aggressive in his investment, and it was only until later where he got to those larger quantities where he was like, oh, I didn't never even stop to think, how do I trade this amount? Like, I have to develop my strategy in such a way to account for these larger quantities. I'm not the, short cap trader anymore. You know what I mean? So that's really the answer to that.
dope.
Alrighty. There's no other questions, and we're going to move forward. So this is what we're talking about today, right? So we're talking about my golden rules, my indicators, my entry conditions, my exit conditions, and a couple caveats. This is the only data slide I have. It's followed by some example slides and then a small closing slide. But everything that I pretty much have researched and know is going to be on this slide. We're going to go ahead and start with the golden rules. So these are my golden rules. And the reason I call them golden rules is because these are absolutely paramount, like critical to the success of this strategy, right? Never trade on emotion. And I've broken these rules at one point or another, and I can tell you it will lead to massive loss. That is not a part of the strategy. Loss is a big part of my strategy. It's accounted for, it's expected. but it needs to be managed. And breaking any of these rules will lead to losses that are outside of what the strategy calls for, right? So never trade on emotion. That's simple, especially as a day trader, because you're exposing yourself to so much risk as a day trader as opposed to a long-term strategy. If you trade on emotion, you're already compromised, right? And I've had a hard time learning to adapt the way I think for this strategy, because early on, right, like especially my mentality, right, like I lose a couple hundreds, I would lose my mind. I'm like, oh my god, I just lost $500. It's like, like, well, I'm gonna make it back. I'm gonna make it back. Or, oh man, I just made $200. Like that's it. Oh, and so you know, calm yourself, meditate, whatever you need to do before trading. Be cool, calm, collected. Risk management is critical. So if there's anything that I would say is sort of the most basic component of the strategy is risk management, right? Because nobody is 100% accurate. Losses will happen, right? But it's more about how you manage that risk, right? And as a day trader, I think there's almost a subtle benefit to day trading because your exposure to the market, to that risk, is very brief, right? So
Why do
I'm
you think
making.
that's a benefit?
What's up?
Why do you think that's a benefit?
So I think risk exposure in intraday trading is beneficial because of the amount of time that you're in a trade, right?
Right.
Especially, and
But I'm
we'll get
asking,
into.
yeah, I was just curious, like, why you think the shorter time frame equals less risk.
Oh shit, Eric is in here. Oh my god. No. Yeah. So volatility, right? Since the strategy revolves around volatility, um, I don't want to I don't want to make a trade and then try to anticipate where it's going to end at the day, right? Or where it's going to end up tomorrow. That's not the point of the strategy. So for me, shorter time periods to be in the trade is perfect, because even if I'm wrong and the volatility goes in the opposite direction of what I anticipated, right? My risk management strategy is already in place and I take a small loss. But disregarding that altogether, is a prime way, and it has happened to me where I've exposed myself unnecessarily to a longer time frame where that volatility within intraday is going to absolutely kill me, right? So I don't want to expose my trade for longer than it really needs to either take that um, anticipated loss or that anticipated profit. That's really, and I can say that from experience because there's been moments where I've completely disregarded my stop loss or my trail stops or my risk management strategy, and like, oh, it's gonna do this, it'll come back, and I've exposed myself, and those are the times where I have had just insane losses.
Got it. Yeah, I asked because that's a really common thing, especially for new traders, is they think shorter time frame is better because they think less time in trade. I'm exposing myself to less risk. It's like a really, really common thought process. And the punchline is, if it works for you, cool, whatever works for you. But the thing to keep in mind is it's not better, it's not worse. It is just a different style, because what happens is in shorter time frames, the probabilities are relative as well as the prices and price movements are relative, especially if we're trading derivatives or anything like that. So yeah, it's just as long as you know that short does not structurally equal better, then totally cool. But if that's a thought, then you just have to, there's a bunch of white papers I can send you that will show you the contrary, and the vast majority of day traders suck. And
Yeah.
there's a handful of studies by Leo, Dean, and Barber that looked at empirical studies, for like Taiwan day traders, and they had actually had a really long study for Taiwan day traders. So, not hijacking your thread or anything, as long as it's just known in the ether that short does in fact not equal structurally better, and you might have a style that prefers short. Totally cool, no drama.
Yeah, and no, and I mean, I absolutely agree. And to everyone that's listening in, this everything that I'm going to be saying here today applies very specifically to this strategy. And a lot of it is honestly going to be going against common sense. A lot of it is going, like, you could take the strategy to a financial advisor or someone like Eric who actually is literate in the economy, financial instruments, and they're going to be like, yo, this is absolutely bonkers, right? Do not do this. This is a good way to become homeless. But short term is what this strategy revolves around. So it's better for this strategy, but overall, yes, I would agree with Eric. You do not want to apply a lot of the things that are applied to this strategy to other strategies. You know, and I would just agree with Eric because I haven't tested them. He has, so I would I would probably put faith in what he has to say. Consistency is key, right? So next golden rule, and we're gonna run these really quick because I'm already taking longer than I thought. Self-explanatory, right? Small wins add up. Okay, we're not trying to hit home runs here, but we're also not scalping. We're not doing 20 day trades in a day. Okay, we're taking small wins, and this will come into play later where we talk about position size. Again, Eric's gonna rip me a new one for this one, but patience is essential, right? So patience is essential, and I learned that the hard way. I don't enter a trade until about an hour and a half after the market opens. I like to see what it's going to, kind of what's the outlook for the day from an intraday perspective, and then losses are inevitable, right? So just as long as you are ready for those losses and you are able to anticipate them, you can cut them off early. Otherwise, you're gonna become greedy and arrogant, and it's gonna be a quick way to hold on to something that you should have nipped early. So moving on, these are my indicators, right? I use Bollinger Bands, VWAP, the RSI, and a big one for me are the trend lines with resistance and support levels. So I'm not going to go into what each one is. These you can find these on Investopedia, but what I am going to say on each one is how I use them. So for Bollinger Bands, I really look at the contractions and expansions. For the VWAP, it helps me identify like for example, if the price is if the movement is further out from the VWAP, I usually tend to look at, okay, what, take that into account to say, okay, how do I feel about it sort of attracting back to the VWAP, right? And then does that line up with my other indicators as well? RSI, I know Ty mentioned this as well. I use this mostly as a support indicator, so confirmation indicator. I'll look at primarily at the other indicators, and then I'll look at the RSI and say, oh, wow, this is also being oversold or overbought according to the RSI. This is a confirmation indicator for me. It's a tricky one because you don't want to completely depend on the RSI because there is a little bit of consolidation that happens where it'll be oversold or overbought, and then it'll kind of even out, and then it'll go right back to the medium, and you're like, well, that did nothing. So now it doesn't tell you anything, and it'll be easier to tell you guys later in the examples. A big one for me too is trend lines, resistance, support levels. So for me, this is the most important indicator. It's one of the reasons I only trade SPY. I only a single ETF. I don't, and there's no reason why I trade SPY versus like QQQ or IWM, but I just SPY is just the one that I picked and I kind of stuck with it. But only trading SPY has allowed me to become familiar with its price movements, its support levels, its previous support levels, resistance levels. Like if it's at 410, I can kind of tell you from the top of my head, like, okay, well, over the last 3 months, this is kind of where it's been at. And it just helps me understand what it's doing, and I'd be able to identify either those breakout zones or those fallback zones, right? And it's just being able to, through experience, look at a chart and know what it's doing for that specific asset. So, questions so far, guys? Sorry, and let me know if you guys need me to slow down.
No, it's good, man. I like that you bring up just trading SPY. I don't like that you trade the SPY just cause, but it's not a bad thing to just trade just cause. But
Oh, okay. So,
the thing
um,
that I wanted to hit on though that I think is super important anyways is like especially if you're intraday trading, so trading within the same day, it's actually really really good that you're focusing on one thing. And one of the main determinants of a successful day trader is the ability to develop pattern recognition and
yes.
apply pattern recognition in future setups, which is, again, that's from the studies that I was referencing before. It's really well documented. So the thing that you're innately doing is actually supported by data, which is really good.
Yeah, and so let me rephrase. So so I trade SPY versus IWM or QQQ only because I picked SPY first. But the reasons for trading SPY is actually because it's an ETF, right? So it's an amalgamation of different assets. I wouldn't day trade anything else because it's more prone to sudden shifts in movement. Whereas ETF it's still prone to volatility, but it's less so of a crazy movement and more of a gradual thing. Even when it makes these crazy movements, it's still way more gradual than I don't know, like trading Apple or Tesla or something where it can be prone to, Elon Musk tweet something and this thing just fucking skyrockets or plummets. And I don't want that to influence my day trading. I want to be able to just have sort of a more, I say stable, but, with an asterisk because it's not that stable, but, more stable than other just one asset. So that's kind of the answer as to why ETFs in particular are the ones that I would trade. Okay, so moving on. So these are my entry conditions. Quick notes, right? I wait for an hour and a half before trading. Again, this is just so I can try to use my experience with SPY and just general price movement to see what's going on for the day. And again, it's just to attempt to identify the daily trend. This is a big one. No trade is better than a weak trade, right? So you have to be able to be confident in your analysis. And if you're not confident in your analysis, just don't make a trade, right? Like it's just better to not make a trade or to wait it out further than to make a trade where you're like, ah, fuck it. It kind of looks okay. I'm gonna fuck it. I'll get in. That is not a good way to enter a trade. So static conditions. I look at we'll actually go over how I pick my option. So I always pick between 0.30 to 0.40 delta. I like the $3.50 to $4.50 price range for an option contract, and I always go from 14 to 16 days to expiration. Now, this isn't something that I immediately developed right from the beginning. I actually started off at different values. I started at lower deltas. I went to higher deltas. A lot of this was when I was paper trading. I went, a month out DTE. I went a week out DTE, and I just played around with that for a little while, and kind of just paid attention to how quickly or how slow or how the option price would react to the asset movement based on those different values, right? Like, okay, so ultimately this is kind of what I came to. The sweet spot for this specific strategy for me is 0.30 to 0.40 delta and 14 to 16 DTE. I find it that it's a really good balance between the option price movement according to the asset movement, and also just sort of how fast the percentage raises, right? Like if you buy at $3.50, you only need the option price to go up to, what is it, like 380 or something like that to get 10%. And you don't need these large movements for you to make your profit for the day. Conditions. So one of the things that I look for. Oh yeah, go ahead, bro.
So why the specific price range? I've not seen
So
that before. So
this. Go ahead.
why 350 to 450 range?
So the 350 to 450 range is usually what I see. That's usually what correlates to 0.30 to 0.40 delta, 14 to 16 DTE. If you look at that in the market, you'll usually see that those specific values correlate to the price being somewhere between 350 and 450.
Okay.
That's
and also,
that's temporary though, right?
yeah, absolutely. I mean, everything about this is like, hey, it's right now, get in. It's temporary, get out. Absolutely.
Well, I just mean in terms of the price itself, like as the what Ty is getting at is right now with implied volatility at 80%, you might have 350 to 450 for your 30 to 40 delta range. If implied volatility is at 30%, that might be 2.25 to 4.5, or to 3.5. So it's just he's just saying that the price itself is arbitrary. It's the delta and the DTE are what are going to be agnostic of volatility.
And that's a fair point. I hadn't thought about it like that.
Yeah, totally cool.
I think I think I didn't even realize that the implied volatility was so high and that it affected the price. Just since I've been trading, I guess it's been so high that's commonly what I see for the price at those values.
Exactly. Yep, and
But
that makes total sense because over the last 2 years we've had increased overall implied volatility, right? Obviously, with everything that's going on. But what you'll notice is if implied volatility starts to contract quite a bit, which I don't see happening, at least for the next 12 months plus, But if for whatever reason, it did start to happen, you'll see those values come in significantly. But yeah, it's just an education point. It's not a problem with it. I think you're just sharing what you've been seeing. But yeah, that 350 to 450 will be ultra relative based on how options are being priced, because volatility is one of the biggest inputs. That's actually the only unknown input in the Black-Scholes model when we're computing the premium of an option. So yeah.
Yeah, and I appreciate the feedback. That's something that I'll go back and change on the slide. I'm thinking I'll probably keep this presentation and just kind of edit it as I go forward. But yeah, so I'll leave the delta values and the DCEs for the strategy, and then just make a note that implied volatility will affect price. And then it'll be subject to change as I move forward. And it's kind of adaptability, right? Like, I mean, the strategy works now, but like you say, the strategy might not work in a less volatile environment, right? Like, it'll definitely have to change. So thank you.
Yeah, of course. That was actually one other question I had, though, is like, do you actually, I don't know if it's in the presentation somewhere, but do you have a list of like the deployment summarized of the strategy?
Deployment summarize. Could you elaborate a
Yeah,
little
like
more
a
on that?
trade log. Do you have like a summation of what you've done and what's happened?
Yes, I will have a statistics page at the end for full
Okay, cool.
transparency with the community. I don't know if it'll be as specific as you were hoping for. I do have a trade log that I keep separately. It's one of my tabs on my personal budget.
Yeah,
But yeah, I do have an overall statistics to include like cost
cool.
basis, cost and proceeds and stuff like that.
Got it.
So conditions, right? When I enter a trade, I don't depend on a single indicator. I try to look at all of them in conjunction and say, hey, 2 out of 3 align, 3 out of 3 align. Like is there confluence between my indicators that I've chosen for my strategy? So I'm looking for narrow Bollinger Bands, right, which imply that contraction, right? That like volatility is kind of lowering a little bit. Is the RSI overbought or oversold? Is how far away is it from the VWAP? How confident are we that we can anticipate a move back to the VWAP? And so these different things, and I have examples later on, are when they align, I'm ultra confident, and I say, okay, I'm gonna make this trade. And even if I take a loss, which usually 2 out of 3 times, I'm not entirely wrong. So, but that confluence is the major thing that I look for, not depending on any single trade. And again, I want to reiterate, it took me time to get here. I used to just, when I first started paper trading, it was just Bollinger Bands and RSI. And I would notice that I wasn't confident enough in my analysis. I started adding the VWAP, I started adding resistance support levels, and volume average, and that really led me to increase my accuracy, which accuracy is what I'm really going for. Okay, so exits, questions before I move on.
So what is the actual entry here? I see a couple different things listed, like lower volatility, narrow Bollinger Bands, but like what, like a bullet pointed list, what are the entry conditions?
I'm confused as to your question. So you
So like
go ahead.
what where do you want RSI to be before you buy?
So okay, so that depends, right? Because I don't trade just calls, I don't trade just puts, and it all depends on where it is, on the indicator. So if it's a narrow Bollinger Band touching the bottom band, RSI is oversold, VWAP is closer to the upper Bollinger Band. That for me would be okay, I'm going calls. If it was the opposite, I'd say okay, I'm going to buy puts. But I look for those sort of confluences between the different, and I'm more of a day trader, like out in, right? So I like to look for the outside values kind of going towards the inside. So for the VWAP, I don't like to buy near the VWAP. I like to buy, further away from the VWAP. For the Bollinger Bands, I like to buy when it's narrow. And if that just coincides, those are my entry conditions. Does that kind of explain or answer your question?
It does. Yeah. The main thing is I'm just slowly bracketing us into kind of specifics. So, how do you differentiate between if you're going to buy a call or buy a put?
So that's dependent on two things. One is how do I feel about the overall trend for the day? and also just the overall trend for the asset, right? So for SPY, we've been on this rally, right? And also the support levels are a big thing, right? So for example, and there's, like I said, there's an example later on in the slide, but for example, there's a 410. It reached like 412, 413. It was going back down towards 410. I already established that personally as a support level, a key support level. All the other indicators were leading it, we're aligning with that. So as soon I actually set a limit order, assuming a certain percentage downfall for the option price, and then that's how I entered that trade.
Got it.
Okay.
So one question. So what time frame do you use?
So when I'm
From-
actively trading, I look at the 1 minute time frame, and I also look at the 5 minute time frame. But when I'm conducting sort of the overall trend analysis, I definitely look at the 1 year daily. Yeah, but those are the three big ones that I really use: is the 1 year daily, the 5 minute, and the 1 minute. Which I should have definitely added that on there. Okay, so
So for entry, one question for entry, like when we see like if the trend is like bullish side, so like what's your plan? Do you like normally buy call or you sell a put? So how does it work? So if for example buying a call would be more expensive, right? So the price will be expensive if you see it, and but when you like try to sell a put, it's much cheaper. So
yeah,
how like
I don't sell options. I strictly buy to open, sell to close.
okay.
Yeah, and again, guys, I mean, if you guys like what you're seeing, like, this is my strategy, but please, if you think that there's something to be learned here, take this and apply it to your strategy. Create a variation of it. And if you're more of the sell options kind of guy, hey, I mean, let us know how it goes. I'd be curious to see if like what the outcome of that is. But for me specifically, I strictly only buy to open and sell to close.
Okay.
Um, we lost Eric. He's probably like, man, this guy's crazy. But exits. So big thing to remember, guys. Most traders will let their losers run and will cut their winners short, right? So if we think about it, if we stop and think about it from a psychological perspective, right? You have a loss. You're probably thinking it'll come back. I'll hold. It'll come back. I'll hold. If you have a winner, you're probably thinking, ooh, I have 5%. You know what? That's good. That's better than nothing. That's better than nothing. And you take that profit. And so what took me a while to kind of come to is cutting my losses early and giving room to my winners to run to potentially make more profit. I found that to be um, it correlates really well with the strategy, especially when we start using trail stops. And so it'll be in the conditions down there. But so for me, 6 to 10% profit is the goal. Anything beyond that is just icing, but it's not something that I'm looking for. Again, I'm not looking for home runs. That is not the point of the strategy. Consistency is the point. 5% max loss is an absolute must for me. Again, these variables are all, my variables. If you take the strategy and make it your own, you can set these variables to whatever you like. I just normally see that these variables are the ones that will happen for a given time frame. So, for example, within a 30-minute block, in a price movement, whether it goes up or down, typically before we see another pullback or a bounce, it'll only move anywhere between 5 to 15% if we're talking about the option price movement, right? Not the actual underlying asset movement, but the option price. So based on that, I've established these percentages as my profit expectations and my loss, my max loss. So conditions to exit: as soon as I enter a trade, I've already entered a trade with the exit in mind, right? So I already know what I think, like I'm already anticipating what it's going to do. All that needs to happen is whether it's going to do that or not. So as soon as I enter a trade, I immediately place my exit orders, which typically are a bracket order. It used to be just a simple stop loss and a simple limit sell to close, but I noticed that a lot of times it would get close to my limit sell, but not quite enough to trigger it, and then it would go back down negative. And so instead of taking any profit, I would just hit my stop loss. So what I started doing instead is I like to set a static 5% stop loss with a trailing stop of 4%. Percentages of the option price, right? I just calculate that and then add it to the trail stop. That's all it is. I have a kind of little bit of a rule of thumb, personal rule. If my profit hits 8%, I immediately adjust my trail stop to 2%. And if it's doing a quick movement, sometimes it'll go up to 12%, and I've locked in 10, or it'll go up to 10 and move back down, but I've already locked in 8, right? So no matter what, if it hits 8%, I know that for the day I already made 6% because I'm adjusting my trail stop. And there's this really cool thing that you can do on Thinkorswim, where if you're trading on the desktop app, when you place the sell orders, you'll actually, a little red line will show up on the chart, and it where it's anticipated to be at for that price movement to come to. So I usually use I should have taken an example of that, but I usually use that to measure out where the price is going to go and how far away I am from the current asset price. And that's how I actively manage my exit orders. The only thing I don't change is a static 5% stop loss. Like that's absolute, static. Like I don't fuck with that. Questions before I move on.
So go ahead.
Oh, okay. Uh, with the profit targets, do you? How does that affect your expectancy? Do you like calculate that at all, or do you just think, or just like through your experience, you just said, okay, well, 8% is a good enough profit target for me. Like I know that these trades, generally work out. Like, how does that affect your expectancy?
So I don't have an expectancy statistic for the strategy. But the percentages have come about from my experience with seeing the option movement, right? So let's say, I don't know, let's say SPY hits 410. It's on a downtrend, it hits 410. 410 is a key support level. I'm expecting a bounce, right? And now it doesn't have to be a bounce into an upwards trend. It could be a bounce back into a downtrend below 410, but I am expecting a bounce, right? And that's what I was looking at. That's what I've been looking at. That bounce is typically somewhere between 5 to 15% before it really establishes, oh, I'm bouncing into an upward trend or I'm bouncing right back into a downtrend. So like, you'll rarely ever see, a bounce of like 20% or something like that, right? It's usually like those bounces or those dips, those pullbacks are usually anywhere between, and I would even say 6 to 10% is really kind of where those bounces are before they continue on downward. And that has just been from me watching the price movement, actively watching the asset, the bounces, and those are the percentages. Because these percentages, guys, were actually a lot higher for me when I first started. When I was paper trading, I had some crazy percentages like 15%, 20%, and they would never trigger. They were never even close to that. So I realized, okay, that's unrealistic, right? Like, what are the majority of these bounces? What is the percentage in the option price movement most of the time? And these are the numbers that I've come to expect. So they're not just random numbers like, oh, you know what, 6% is good for me. No, they're based around the typical bounce price movement for the option price on a the chart. Does that answer your question?
Yeah, dude. That answers it pretty well. And like another question that I have is like, what do you do when like a sort of like an anomaly happens where you get, I don't know, say 15% on a trade, like really quickly, like unexpectedly, you would say. How do you manage that? Is like, do you just have like set rules for that, or you just like,
You
oh,
mean
okay,
like
well,
50% loss or 50% profit?
uh, I mean, either one, but in this case, I'm really talking about like profit. Like if it just goes up in your favor, like 15%, just like in the first like few minutes of your trade, is there like a sort of like a mental thing where you just say, oh, okay, well, this is like this is such a large amount of profit that I might as well just take this down.
Mm-hmm. That, my friend, is a question that I had to fight with or like internally battle with, right? Like, when do I take profit? Should I take profit now? Should I wait? Like, I don't want to risk it. Solution: trail stop, hands down. I don't worry about shit with the trail stop, right? If like I said, if it hits 8%, I adjust my trail stop to follow it a little bit closer. If it goes higher, great. If it doesn't, I already locked in my 6%. You know what I mean? So honest, because so my 9 to 5 job, I often like I'm an IT contractor, so I'm often going in and out of closed spaces. I'll come out to look at my phone. If it's at 8%, I'm like, dude, 2% trail stop. I go back in. I don't even come back out anymore. I'm like, it's gonna trigger, and no matter what, I'm gonna make at least 6%. I've come back out. Sometimes it's like, holy shit, I made 12% because it hit 14, went back down, triggered my trail stop. Or sometimes I'll come back out and I'm like, oh yeah, it did trigger my 6%. Okay, cool. But for me, those were those expected profit values, and anything past 10 for me really is like, hey man, that was a really quick movement. Glad I had that trail stop in. Great day. I try not to think about the trail stop gives me the opportunity to not think about, oh man, I could have made 15% or could have, or should I hold? Is it going to go up higher? Like, I just don't know. I don't know. Nope. Trail stop. I'm going to make what I'm going to make. And I already know I'm profitable. Right. So like, I'm okay with that.
Leo, what about the static 5% change? Is it based on the initial entry price, or do you change that to along when you get profit in?
No, 5% is based off of the initial entry price.
Okay, gotcha.
Yeah.
Leo, I have a question.
Yeah, man. What's up?
You may have mentioned this at the beginning that I missed, but so I just wondered what kind of time commitment is this? Obviously, you just said that you have a full-time job and you're bouncing in and out looking at this. I just want to know how practical it is for people that do have jobs to do this.
Man, that's a tough question. Honestly, if I could, I would be at home because there's so much data that the desktop application gives me that I'm missing out on my phone when I trade, because a lot of my trades happen on my phone. And sometimes I try to come home for lunch, which is usually for like an hour and a half, and that may I'll get into trades then. But I think the biggest time commitment is just watching the charts, and not all the time, but daily. Checking on them daily at the beginning of the day, middle of the day, at the end of the day. If you could spare 5 minutes, 5-10 minutes, to just look at the chart, see what it's doing, right? Like look at it in the morning, and then just in your mind, just make what do you anticipate is going to happen based off of what indicators? Okay, make a mental note. Come back at the middle of the day. It did this or it did that. How wrong? How accurate was I? What did I miss? At the end of the day, where did it end? Okay, how does the close value? What is it saying about the overall trend on the daily chart? And so commitment wise, it's just more about becoming intimately familiar with the asset. As far as actually entering trades, it's a lot harder to say because I used to, and I don't anymore. And I've noticed that my accuracy has become better. I don't buy at market, right? I don't buy at the best um, value currently. I always enter a trade through limit orders of where I think it's going to go. So if it's trading close to, like, let's say it was at 413 SPY, right? It was at 413 and it looks like it's on a downtrend. I know 410 is a key support level. I'm going to make an educated guess based on my experience and the percentage movements of the option price. And I'm going to say, okay, right now it's at, I don't know, $4.30, the option price, right? For a call for, I don't know, 420, and it's at 413. And I'm anticipating it's going to go down to 410. What I'm going to do is I'm going to set a limit order to 430 minus, I don't know, 10%. And I'm going to set that limit order because that's what I sort of think how low it's going to go, and that's what I anticipate the option price will be based off of experience when it hits 410. And that way it'll trigger. And if it doesn't trigger, it doesn't trigger. And I'm like, okay, good, I was wrong. But I haven't even entered a trade, so I have zero risk because hey, I was wrong. It didn't trigger that. But if I buy right at the market value and I'm completely wrong, I'm immediately going to go into a loss. So I don't buy at market value anymore. I only set limit orders based off of where I think it's going to go. And again, I trade outward, so out from the outside inside. So away from the median of the indicators towards the inside. That's Does that answer your question?
Can you show us an example, please?
Yes, I have an example right after this slide.
Okay.
Any other questions, guys?
Yeah, I think like when it comes to like the time spent trying to, like either deploy the trades or anything, I feel like it doesn't really require a lot of time to place the trade. Like whenever you're placing it on your phone, like more or less a few minutes, but the real time comes in like after market hours, like looking at the previous day, or like when you're at home, like that night, you're looking at the chart
Mm-hmm.
saying, okay, this is
Mm-hmm.
this is what I see. Then like this is where I'm assuming my or the next move is going to be. Like, I really feel like that if you put in the work, not like put in the work, but just like the homework aspect of it. If you're looking like at the end of the day, or you're looking at like the morning, but like before you go to work or something, I think just kind of like to Todd's question, that if you create some little segments of time where you can sort of get ahead and have everything planned out pre trade, then it'll save you time in the moment, so you don't have to hover over the trade, or you have to look at the chart while you're at work and say, okay, well, this is where the SPY is moving here.
Mm-hmm.
Like how do I manage off of that? Like you can have everything sort of pre-planned before like that day, and then sort of just follow it out. And if it goes according to plan, maybe throw in that trade. If it doesn't go into according to plan, then maybe just hold off.
Yeah, and I mean that's exactly right. And to add on to it, man, like so two things that allow me to day trade the way I do. One is my job. It's very flexible. I can have my phone on me most of the time. I have my own office, so I just, I'll be looking at my phone or whatever, So, as long as I get the work done, I have that ability. I'm an IT guy. I'm a sysadmin, so I'm already in front of a computer. I'm not doing hard labor. And then also with that, familiarity, right, with the asset, with whatever asset you pick. Hopefully, it's an ETF. I just, I've become so familiar with the price movement and the resistance support levels that I can say, hey, this is where I think it's gonna go. I can set my limit order and not worry about it until I get a notification saying, hey, it either pinged, or I'll check back on it 30 minutes later and say, oh, it went the opposite way. But I've gotten to the point where I don't need to be consistently looking at it to really kind of anticipate where it's going to go. And I mean, that just comes from experience with that one asset, right? So I don't spend as much time anymore just looking at what it's going to do. And I spend more time anticipating where my entry condition is going to be.
So are you guys writing down your assumptions and checking for the validity on it when it does move towards your assumption or away from it, or just like a mental stop kind of thing?
For me, it's more of mental fine tuning. Saying, hey, well, like for example, when I was paper trading and I was changing a lot of these variables around a lot, like I would go from one end to the other just to see what would happen. I, I wasn't necessarily documenting every little change that would happen, but mentally I was saying, okay, well, like 0.10 delta is too low. Like 0.60 delta is a bit too high. Like let's try this and let's try that. And so that's how I've been fine tuning my strategy, more of like a mental thing, not necessarily for me documenting the delta for every single trade, because I'm already assuming that every single trade is going to be either between 30 and 40 or delta, or 14 to 16 DTE, or percentage wise.
Gotcha. Yeah,
But I
I
do
guess
have
my question.
statistics, and I do have a journal, and I do have statistics that I'm going to show you guys at the end of the presentation.
Cool, man.
All right, caveats, guys. Again, this is super important, right? And I want to reiterate something that Eric said, and I don't know if Eric got irritated and left, or if he really had to go, but you know, I'm not the guy to emulate, right? Like this is an aggressive strategy for aggressive growth with massive loss potential. And you guys, I will show you guys full transparency at the end of the presentation the losses that I have taken, not through the strategy, but because I failed to implement my strategy risk management. Okay, so if you are undisciplined and you cannot get over that psychological barrier of losing money and making profit, you're going to incur massive losses, which I have. Again, let's see what else. Right, so not a normal trading strategy. Any financial advisor would tell you that this is absolutely fucking bonkers, but it works for me. I've been fine tuning it. This is not something that I came to overnight, that I found on Reddit. This is something that through my previous mentor James, we worked on it together. He showed me kind of what he did. I applied it to myself, changed some variables around, and this is where I've arrived. So moving on to the examples, right? So this is an example of, I think this was yesterday. This was a trade I made yesterday, right? So what are you guys seeing here?
My screen is blank, dude.
What's up?
My screen is completely black right now. I think it's loading on.
Might be loading. Yeah. Is this because anyone else seen it, or did it go?
I can see it. So it looks like you went in at your 410, which you've been talking about, that resistance level.
Support level? Yeah. Yeah. So to explain kind of what's going on here, right? So real quickly, the blue lines are the Bollinger Bands, purple line is the VWAP, the yellow line is a static drawing tool, right? Price level for where I considered the key support level to be at. I've got my volume, my just simple volume averages, and then I got my RSI at the bottom, right? This is what my daily chart looks like. This is what I trade with on a day-to-day basis. It's been an evolution of where I started. This is where I'm at now. So if we just ignore everything past the first circle, right? Now this we can see it's on a downtrend, right? It's riding the lower Bollinger Band towards the 410 key support level. RSI is through the fucking floor, right? It's absolutely like bottomed out, and as soon as it hits that 410, it starts to play around there. That for me is an entry, but I don't place that entry right then and there. I would place it probably when it was closer to the VWAP, right? I would say, hey, you know what? It's probably going to get 410, and I would go ahead and place my limit order, and then adjust it accordingly to how I see how far down the option price is moving, and that's when I would enter a trade. And I would exit the trade probably at the second circle, because that's usually how long that for SPY specifically, like about $1 value is about the value you're looking for a 6 to 10% profit or 6 to 10% increase in the option price, especially when you're buying at like 30 to 40 delta. This changes because 30 to 40% or 0.30 to 0.40 delta has a big impact on how much the option price is going to move in respect to the underlying asset, right? So based on the values that I've already assumed I'm going to be entering a trade on, I can safely say that that's when I would exit the trade. If nothing else, even if this were to then at the second circle immediately plummet, I know that I've already have my trail stop. So no matter what, even if I make 3 to 4% profit, I've already locked in profit. But let's say that, and well, you know what? The second example is the polar opposite of this, and you guys will see how my exit strategy is applied to my risk management strategy. But questions on this example before we move on? But and I want to reiterate the confluence between all my indicators, right? I don't look at just one indicator. There's this is like I couldn't have asked for a better example of how all my indicators literally lined up, right? Volume breakout, RSI low, lower ride on the Bollinger Band, 15 to 20% away from the VWAP, approaching a key support level. Can everybody see the chart? Anybody have any questions?
I can see the chart, but I don't have a question. I did want to say that I don't want to cut it short or anything, but I am going to hop out of here in a few minutes. So just a heads up.
Okay. Yeah, I got you. Yeah, man. Sorry, it ended up taking longer than I thought.
Dude, no worries. I love the presentation.
Okay, so no questions. Move on. Same exact scenario, except it's a loss, right? And again, guys, this is just part of it, right? Right here, it kind of horizontally traded for a little bit, and then it just went down, and that's fine. It would have triggered my 5% loss. That's it. I'm done for the day. Like, okay, come back tomorrow. But this right here is so important. Being able to just take this kind of loss and saying, hey, it didn't pan out, right? The strategy isn't always right. It's not what it is. It's best case scenario. You know what I mean? But this is I was so lucky to find this. This is literally the exact same example. I think this was on Monday, and the one from yesterday, the earlier slide was from yesterday or Friday. But yeah, any questions on this?
Yeah. So on this trade specifically, you were on a bullish hypothesis, correct?
Yeah, I was overall bullish for the day. Yeah.
Okay. So on this type of scenario, What caused you to think that price was going up on this?
The confluence in my indicators, right? I look at the downtrend; it's 15 to 20% away from the VWAP. It's reaching a key support level, and if you look at the RSI, it's not dramatically below 30, but it is below 30, right?
Mhm.
So all my indicators align, and according to the strategy, this is what should happen, but it didn't. And like I said, it's not always accurate, but my indicators, like this would be a trade that I would enter ultra confident, like, oh man, all my indicators align. This is great, and then it didn't. But I didn't want to put it as part of the slide, but this specific day, later on in the day, it does end up. It only I think right around where I cut it off, it kind of trades horizontally and then it comes back up over 410. But it wouldn't matter because I'm not holding, right? I've already triggered that 5% stop loss.
Gotcha. Yeah. Okay. Yeah.
All right, guys, and the final slide because I know Ty has to go. This next slide is going to be just for full transparency. I don't want to be just the guy that's telling you guys like, oh, this hold on. Yeah, I don't want to be the guy that says, oh, I just pulled a strategy out of my ass and not have anything to show for it, right? So these are my personal statistics with real money in my real account. So I've only been trading my real account since 2022. I've made a total of 64 trades. I have accuracy rating of 67%. Now, there's another part that I want to show, okay? Because this is so paramount and it's been absolutely pivotal in my development as a trader and implementing this strategy. YTD, my average loss compared to my average win is fucking disgusting. It's disgusting. Last 4 weeks where I've really dialed down on my strategy and just been like, dude, I'm not gonna hold overnight. I'm not gonna hold over the weekend. I'm not gonna do anything that's not in my strategy. The last 4 weeks, that's what my average loss and average win look like. Okay, YTD cost basis, cost versus proceeds from TD Ameritrade. They have this really cool thing where it'll show you. I'm still negative. Okay, so here's the next one. Overall, since I've been trading my real account, I'm negative $15,000, right? And I can say that is because of 3 trades. 3 trades. If we were to take those 3 trades out of my account, that first YTD average win versus average loss would be dramatically different. May 14, right? So in not May 14, but in May, when I took that 14K loss, I did an over the weekend trade. I held over the weekend. That is not in my strategy. It is absolutely not in my strategy. That was me just being arrogant, being cocky, thinking I knew what the fuck I was doing, and I took a 14K loss, and I could do nothing about it because when it opened up on Monday, I was already at a 14K loss, right? June, and you would think I would learn. I didn't. June, 27K loss, right? Again, another weekend hold. And I'm like, why do I do this to myself? Right? Again, it's that psychological barrier. In June, again, towards the end of the 27K loss was towards the beginning of the month. 11K loss was towards the end of the month. That was an overnight hold. I held overnight. It gapped. Absolutely demolished me. Right? So 3 trades out of 64 were greed and arrogance, where it cost me massively. But whenever I applied my strategy and I stuck by my risk management rules, where I say, hey, this is my static loss. I'm not going to risk anything more than this. If I lose 5%, I lost 5%. But goddamn, 5% is better than a 60% loss, right? Because I stuck to my strategy. All of my major losses have been because I held overnight, I held over the weekend on a strategy that revolves intraday trading. And this is full transparency. I would love to maybe in a month come back and see, tell you guys how I'm doing. I fully expect me to get rid of that deficit by the end of the month. But again, only if I stick by my strategy, right? And this strategy, also to say, is it's not sustainable. This isn't, something that's going to be viable years down the road. It's not something that you can do consistently. This is something that I'm doing now to aggressively grow my account, because what I eventually want to get into is the covered strangle. I want to do the iron condor. I want to do these other things, but I want to get this, down to a T for myself. And then lastly, I know Eric's gone, but I just want to thank Ty, man. I want to thank you guys for sticking around for this crazy presentation, and just giving me the opportunity to talk and share my experience. That I could say that I've risked real money in my own account, my own holdings to provide historical data, real data. You know, this isn't just me paper trading. This is real data. Questions, comments, concerns.
Dude, thanks for doing this. I can say nobody is safe from the roasts. So glad you
That's
glad
true.
you did it. No, like a few like ending notes. Like if I could leave anything, would be I would be really curious to see what your expectancy rating is rather than your accuracy rating, because I mean, although like you do have a fairly decent 67% accuracy rating, that may not coincide with a great expectancy rating. Um, like I'm sure if you did the math, you could find out even more accurately so whether your trading style, the strategy itself, is profitable over the long term. You know, like keeping all the metrics that you use now in mind and extrapolating that out into time, the future, you could tell just how well your strategy would do across. I mean, this market, you know, in the future, or maybe even other different markets. So that's a big thing that I feel like would be really important to include moving forward.
Yeah, man, you mentioned this last. You mentioned it like 2 months ago, and I haven't I haven't added it. The expectancy
Yeah,
calculator. Yeah,
that's
I
no
have it
worries.
in my notes in like bold capital letters. Add expectancy chart. I haven't done it. Sorry, but yeah.
Yeah,
Now,
no worries.
I agree with Ty's feedback because you already have all the data anyway. You have your average wins, you have your win size, everything. So you just need to plug it into the formula. It'll give you a better picture of where you are and where you can take this strategy.
Yeah, you're like 70% of the way there. You know, it's. But yeah, man, I'm
Well, I appreciate the feedback, guys. I know we ran over a little bit. Any other questions, Mr. Garcia? I'm really curious to hear what you have to say, even if it's
Uh,
negative.
it's really good. It's really good. So it's I have learned a lot of I have